Every single day, the market is communicating with you. The problem is that most traders don't know how to listen. They look at charts, searching for entries, indicators, patterns, signals, but they miss the bigger picture. They don't understand that every price movement is part of a story. In this video, I'm going to show you how to read the market narrative like a professional. Now, let's get into it. Now, look at this. Don't forget that for some time now, I've been teaching you market structures, how to actually understand the language of the market, right? Now, look, as you can see, this is a bullish price action. Now that is a bullish price action, it has created what? A bearish pattern. What is this bearish pattern? A bearish fair value gap. I want us to map it out. Can you see that? We've mapped it out. And don't forget that a fair value gap is a magnet, and it's also a what? A rocket. So we expect that this bearish fair value gap to what? To push price lower, because it is a bearish fair value gap. Its function is to push price lower. But first off, price has to move into it, because it is actually a magnet, and when it magnetizes price towards itself, it pushes price away. So let's take a look at it on the next slide. Look at this. Now this is our expectation. We expect that price comes into it, and when price comes into it, it pushes price away. Now the story here is that a fair value gap is expected to create a new fair value gap for a trend to continue, because fair value gap is the leg that price uses to move, you understand, in the market. Okay, if there is a creation of a fair value gap, now we expect that this bearish fair value gap to create a new fair value gap for this trend to continue. Yes, all right. So if there is creation of a fair value gap after this fair value gap, it simply means that what? Trend will continue, because the trend is your friend. Now, the best way to make money in the market is by following the trend. So we expect this fair value gap to create a new fair value gap, so we can enter off of that fair value gap. That fair value gap will push price lower to create a new fair value gap. So this trend will continue. That is a story. That is part of the story that the market is telling you. But in a situation whereby this fair value gap that is expected to create a fair value gap is not creating any fair value gap, what does that imply? It simply means that what? The trend is not going to what? It's not ready to continue. Maybe probably the market wants to what? Wants to reverse. Now let's take a look at this. Now look at this. Just like we have stated earlier, we expect this fair value gap to push price lower. And when it push price lower, now how do we enter off of it? This is our boundary. So we are trading from this fair value gap down to the low of this fair value gap. Okay, so that is our boundary, because we know that after price has taken down this low, price is expected to what? To retrace back into a new fair value gap that it created while this price was going down. Or probably if there is no creation of a fair value gap, price will take out this low and reverse to take out this high. Okay, so now let's take a look at it. Yes, this is it. This fair value gap is expected to create a new what? This a new fair value gap in the making. Okay, now let's take a look at the look. Yes, can you see? Now, after this fair value gap has been created, so we also expect that this fair value gap will push price lower. As it's pushing price lower, it's expected to create a new fair value gap. Can you see that the trend is what? Is forming because of what? The creation of what? Fair value gaps. So this is telling you a particular story which you need to understand. You need to be able to what? Read it. Now let's go into it now. Can you see? This is our first initial bearish fair value gap, right? So we expect price to come into it. Price has come into it. Now we've set our stop loss. This is our entry. Then you target the swing low of this what? Of this fair value gap. Can you see the low? So this is just your one, like your 1:2. Okay, now let's see if price went, can you see price went down to take us out, you understand, in profit. Can you see? To take us out in profit, because what? A fair value gap is expected to push price lower, right? But there is something that we fail to understand, especially most traders, they fail to understand. Some traders will place their entry here and they will place their stop loss somewhere around there because they are targeting 1:20, 1:30, 1:10. Okay, but when you enter the market, always ensure to see that, to monitor or observe if this fair value gap is creating a new fair value gap as price is going down, as price is going bearish. Can you see? It is not creating a fair value gap, but what is happening? Can you see? Every part of it is closed up. So this is what? This is to tell you that, wow, something is about to happen, because this is not a trend. Yet for the fact that it went down to what? To the TP, to the take profit level, it went down to take out this low, doesn't mean that price might continue lower, because every fair value gap is expected to create a new fair value gap for a trend to continue. But as we are looking at it now, it is not creating a fair value gap. What should you do after you've taken your profit? Wait to see what price wants to do, or wait to see that a new fair value gap is created. If a new fair value gap is created, then you can now ride on with that fair value gap down. But from the look of things, when price is not creating a fair value gap, it's trying to tell you that what? Price wants to change direction, it wants to reverse. So if you have placed 1:20, you understand, and you are expecting that price will continue lower, you understand, so now price could just go up, take you out, and continue upwards. You see that? So that is just that. You need to understand the story. Can you see? This is our expectation. Price will just go up. Maybe it could even go up a little while before coming down. You understand? So now that is it. Now let's take a look at this too. Look at this next trade sample. Can you see? Price has been what? Forming lower low. It created a fair value gap here. So we want to use this fair value gap as our point of reference. Now look at it. We expect that this fair value gap will push price lower to create a new fair value gap. Then this trend will continue, right? Now, can you see? So as price tapped into the fair value gap, then the fair value gap rejected price and price is coming lower. Can you see? Now it is not creating a fair value gap. Though if you had entered here, you understand, and you place your what? TP at the low of this fair value gap leg, you would have made your profit. But you need to observe the market, the condition of the market. Is fair value gap being created, a bearish fair value gap being created, because this is a bearish fair value gap? You understand? So now bearish fair value gaps are not being created, except maybe somewhere around here. Even though after it has respected this fair value gap, it is still not pushing lower. So what is the market trying to tell you? It's trying to tell you that what? Price is not ready to move lower. You understand? It's telling you a story. You understand? You need to understand this story. Okay? Its price is not ready to move lower. So rather, price wants to what? Want to what? Change direction. Now let's take a look at, can you see? Can you see that? So price has changed direction and it's moving higher. If you had entered there, maybe probably you place your TP, your stop loss somewhere around there. If price has gone this far, you understand, and it has not hit your TP, but you observe that fair value gaps are not being created, that is a sign to what? To leave the market, to go out in the profit that you've made. You understand? And you wait to see what price wants to do. Okay, now let's take a look at this. Now, can you see? Price has changed direction. Now, price has changed direction and it has created a new what? A new fair value gap. So you could trade off of this fair value gap upward. Now let's take a look at what eventually happened. So by the time you place your what? Your entry here, then your stop loss at this low that created the fair value gap, then you target your what? 1:2, or probably you target this high here. All right. So then what eventually happened? You wait for price to what? Can you see? Price came in. You understand? If you had stayed with this your entry and you expect that price will continue to go lower, price would have what? Come back to take you out of the market in loss. But you need to understand the story the market is telling you. The creation of a fair value gap is telling you a story that what there is going to be what continuation in the trend. The non-creation of a fair value gap is also telling you a story that either price wants to range or price wants to change direction. I believe you understand that. Now let's take a look at this too. Now let's take a look at this particular trade sample. Can you see price has been choppy, kind of? It is not creating fair value gap. You see, despite the fact that yes, it's pushing up, this is not the kind of market that you want to trade in because it's not creating fair value gap. Because fair value gap is the leg that price uses to move. And if it that it has created fair value gap, this price action, this market would have gone so far. You understand? So now it's not creating fair value gap. So this is going to tell you that the moment price is not creating fair value gap, in the moment it takes out a high, a swing high, expect that price to fall most often. Okay, so that, can you imagine, after it has come up, it has taken out this high, what happened? Price fell. You see that? So that is that. Now let's take a look at this too. Now we expect that this fair value gap will push price lower, right? So now let's take a look at this. Can you see it is not pushing price lower, rather price is pushing up, and it's not creating fair value gap, it's not creating a concise fair value gap. And just know that this, since this fair value gap has failed, and besides price is not, if the bullish price action is not also creating bullish fair value gap. The moment it takes out a swing high, expect the price to fall. That is, in most cases, expect the price to fall. Can you see how price fell? Wow. Can you see this? It has taken this liquidity and price fell. Price fell. That is that. The creation of a fair value gap is telling you a story, and the non-creation is also telling you a story. You need to understand what the market is telling you, the story that the market is telling you. You understand? Ability to read it will make you highly profitable. All right, go to the comment section and drop your questions. I will come back. I will definitely respond to everyone. All right, thank you, Ageless.